Hello and welcome to this week's edition of Off the Record with ETX Capital. I'm Andrew Sachs and I'm joined today in the studio by a great friend of mine and a long-time industry stalwart, Dan Moczulski. Hello, Dan.
Hi, Andrew. Thanks very much.
Great pleasure. Nice to see you. And Dan is Regional Manager for the UK and Head of Business Development at eToro, and over in Canary Wharf here in London. And eToro is a big company that's been around for quite some time, and actually we've seen a lot of growth of the company. So Dan, also, you've been around in the industry for also as long as me, I expect. We're not suggesting that you're old like I am, but
Thank you.
So what is you've got to a senior standard, and actually last year I was very interested in your move to eToro from having your own company, which was a very successful business,
sure,
and having an exit and an acquisition by Axi Corporation, which is an Australian company,
yep,
and then go to join the corporate world, rather an interesting move at senior level. What was it like joining a corporate company after having autonomy for some time?
I think I was first to say I'm 2 months into eToro, and there's many aspects of it that are kind of great from that perspective. So the last, say, 7 years of being at Star, being able to control which way the business is going, being able to design new products, being able to kind of react pretty quickly to how the industry is changing. Well, that was great. That was great. But on the flip side, the difficulties that you have, things through the pandemic, for example, where we've got to, kind of a small operation, a lean operation, react to the dramatic changes that have been required from businesses. Well, I have to say, now I'm at eToro, things like that are a lot easier to deal with, and there's different departments that can deal with things. You don't have to do it all, and so that is one of the great changes that moving to the corporate world has provided.
Yes, I agree with you, and I think we're going to see a lot more of that as time goes on, because this lockdowns don't end, and it is very hard for small businesses, even small businesses that were a kind of household name in their industry. And your company Star Systems was a very well known, and still is a very well known entity in the industry. It makes trading platform technology, and everybody knows the business. But still, it's hard to run your own business when there are constraints on travel and on visiting customers.
One thing that's really great about our industry, the trading industry, and this has changed over time. So if I was to talk about, say, 20 years ago, I was at a firm called IG,
yes,
and IG and the industry, the trading industry, at least from my exposure to it, was very much about the UK. What's happened over the last 20 years, it's grown massively, and it's no longer centred on just one small territory. It's global, and one of the ways I actually describe eToro as being different to other brokerages, the vast majority of brokerages over the last 20 years have started local and they've moved global. Where eToro is one of the first businesses that actually, from the very outset, was considered global. And it's interesting now with the UK office, with its US office, it's actually now starting to go local. But you're right, what was difficult for a small business within the trading industry, especially through the pandemic, I was trying to sell the software, the trading software, to brokerages globally. And, that may have been that I'm doing an exhibition in Hong Kong. It may have been that I wanted to see someone in Sydney. It may have been that I wanted to go to Cyprus to see the number of brokers that are down there. And that was just not possible. And, it's very hard for a small firm. And what I would say, again, for a small firm, it is through seeing people that you're able to kind of explain how your kind of complex trading technology works. It's not something that a banner on a website can accurately describe the complexity of a platform. So that has been very different for me.
I agree, and actually that's a really interesting point, because over the years I've often said that this is a very online business, and anyone who's a trader who watches what we're talking about here will understand. This will chime with them, because it is an online business, and quite often, before a lot of news sources came up and before a lot of the forex industry community was really developed, you had just a screen to look at. There was no way of seeing the company on the inside. But on the other hand, it's a relationship business. Behind the scenes is all the relationships between brokers and their liquidity providers, and brokers between their platform developers. So exactly as you say, at Star Systems you would have had to go to all over the world to visit customers and spend time inside their offices, because it's a relationship business. When trades, when market prices and so forth are being integrated into a platform by a brokerage, that's a relationship business, and as it is also with the liquidity firms that are sending feeds, everything is relationship orientated.
Yeah.
So it does require a lot of travel and a lot of on-site presence. And there was a time when I was doing about 400,000 miles a year in the sky. Wow. And it's not that long ago, and it's because of that. You have to be with customers, you have to be with the industry, you have to see it. So it's kind of interesting to go to the point where a company can be a global company and eventually get to mature enough to be able to center itself in one of the global financial centers like London and still service its worldwide client base.
But, I'll tell you what I have been surprised at. So yes, I've done the last 7 years of technology, but I think what we do have to pat the industry on the back with is how well it's responded to the pandemic.
Yes, it has. It has.
I don't mind telling you that if we were, let's say 10 years ago, 15 years ago, every year I would have been involved in a disaster recovery day or a business continuity day. And I was sat there thinking, well, what is the point of this? We're never going to lose the office. We're never going to have these kinds of difficulties. And lo and behold, the fact that every brokerage has been holding these kinds of events for the last 15 years has actually meant that we've hit the ground running with the pandemic. And I'm just so surprised that there hasn't been stories of a particular brokerage that struggled to do. It's almost like
there hasn't.
Everybody seems to have hit the ground running, which is unique. I'm not aware of any other industry.
Some of them were inundated with work.
It's been quite amazing how the industry has reacted, and in some cases grown from the situation of the last year and a half.
It certainly has, and actually, not only that, but that's a very important. I don't think many people have really considered that, but you're absolutely right. That's a very important point to think about, because not only is this an industry where the topography of a trading system is structured in a certain way, and it requires relationship building, it requires access to people who are working in the tier one banks, who are executing trades, who are at their desk using the right infrastructure, using the high-speed dedicated points of presence connections that deliver trades to and from servers and hosting providers. But it also, all of us, there was no run-out period. As you say, a disaster recovery is all designed around, from a software point of view, is all designed around what happens if there is an earthquake or something, or if there's an power outage, and it can be localized. But everyone around the world, in the West anyway, in Western countries, were told in March last year, that's it, no more going anywhere. And all of a sudden, and there was no precedent for this, and nothing. So a lot of businesses, analog businesses, they had to shut their doors, and they went destitute, a lot of them. But the way this business has been structured has kept clients going without any problem.
Well, what I was also going to say to you, Andrew, it's not as if anything, there's been two issues. There's been the pure fact that as an industry, that we've had to change to this new way of thinking and this new way of working. And as I said, I think the industry has coped incredibly
Remarkably
well with doing that. But then, on top of that, we've now got the issue of kind of hundreds of thousands of people who previously had a reason for not trading, that they've not taken up trading, have suddenly discovered the world of trading. So we've had this kind of amazing situation where we're all having to work from home, but then that has a kind of double impact on the industry, because all these people that are now working from home in different industries might actually be of the mind that they want to start trading or investing in markets. So we've had both aspects hit us at exactly the same time.
And we've noticed that. There's a lot of very educated people who have very good jobs, who are very analytical, and they have started to, instead of using their time commuting or having to sit at an office where the internet is blocked or something like that, they can move their work period between hours at home and then trade the markets as well. And these have become new entrants into the market, and they're very analytical people because they've gone through a period of constant economic change and having to adapt quickly, plus having to learn this from scratch.
You could, we at eToro are currently kind of identifying March 2020 as almost like an inflection point within the industry. That two things happened. So obviously the pandemic has kicked in, and institutional money has been removed from equity markets. It's been removed from various different sectors of the industry as the institutional market kind of thinks, right, this is something we've got to get out of. Equity markets are going to collapse. That pushes state prices down. And now what seems to happen, or we're concluding has been the case, is it's created a vacuum, and all these people that previously used to work perhaps in the industry, but they're now working from home, they've now got the ability and the setup to trade themselves, have noticed that prices are a lot lower than they were the previous 6 months ago, and actually this vacuum has pulled people into the market.
Absolutely.
Which is just amazing.
And they're going multi-asset equities and so forth. Because of the volatility, there's been no volatility in various markets for a long time, but now because of volatility, whenever there's an announcement that something has to shut or there's a company that's had to be consolidated or something, there's more volatility in the indices. So even today, it's huge. It's over the last few months with the FTSE 100 has gone right up, and it's this analytical mindset that the retail traders have now taken the place of some of the prop shops, and they're actually trading these indices.
There's been a huge number of things that have changed over the last year and a half. And you said the word community about the investment industry before. Well, it's not just happened. The community of brokerages have worked out how to react to the changing markets. Actually, what seems to be happening now is we're building communities of investors. There is a community of Tesla investors.
That's right.
There's a community of Bitcoin investors, of Dogecoin
and they're
investors.
influencing the prices.
It's the market has changed dramatically over the last 2 years.
It's all very, you're right, it's community driven. Now that was previously a very cryptocurrency thing, but the community driven aspect, and it was considered that was considered a very fringe aspect of any form of electronic trading. But now, as of January this year, we've seen that communities like Reddit communities and things like that can actually affect brokerages and banks. There are 33 banks, brokerages and market makers now in a lawsuit in the US for locking their customers out of their platforms and so forth.
I think what you have to recognise in those circumstances, and it's a different. The brokerage industry has had to adapt to this new model. And then maybe this is obvious, maybe it's not. But if you have one individual that wants to trade a large amount of stock, that actually requires the same amount of kind of computing or technical capability as one person who wants to trade a small amount of stock.
That's right.
However, we've had a dramatic change now in that we have millions of people that potentially want to trade a small amount of stock. And the technical requirements for providing that facility are totally different. And, we're so glad at eToro that we've been on top of it from that regard. But it's a different proposition, a totally different proposition to what existed 2 or 3 years ago in the industry.
Yes, it is indeed. And, you have also, along with this community-driven aspect that's really gained weight, and because of the disruption that it causes, it gets massive attention on a worldwide scale. And now, with these SPAC listings on the stock exchange, which bypass all the IPO processes, companies are getting relatively recently started companies are getting massive valuations and listing quickly onto public exchanges. Immediately, as soon as that happens, people are watching from their computer at home, getting onto Reddit and influencing all the prices. So that's something that, as you rightly say, the brokerage industry has to keep abreast with, because that is the future of the retail, the mentality of the retail market is a community-driven, decentralized, peer-to-peer future, I would say.
That certainly seems to be where we are at the moment. And I think it's so interesting that this community, is not simply trading and investing products based on the potential return that they will receive. It's an economic term, but they seem to almost be deriving utility from holding the asset class as well, which might alter what they're willing to pay for it.
Yes.
There's interesting aspects within the industry at the moment, such as fractionalisation. So eToro was one of the firms that pioneered the fractionalisation of stocks, and that is to say, you know, you might have and typically it happens to be US stock, but you might have a US stock that's particularly highly valued in that, let's say it's worth $10,000. Now, if you're entering the market and you want to trade that particular stock, it used to be the case that unless you had $10,000 to buy one stock, you couldn't participate in that share. But now with fractionalised shares, it's perfectly possible to say, well, look, I just want $500 worth of exposure to that stock. But the interesting bit about that is when you decide to place your trade to say, right, I just want to invest $1,000 or $500, it's not the price that you're using to dictate what your exposure will be. It's the amount that you want to trade. So it's interesting. Some of these communities are less exposed and reactive to the price.
Yeah.
Now that used to be, you know, if we go back a few years ago and, you know, we looked at very volatile times in the financial markets, when the markets dipped, that used to encourage a sell-off from other investors. What seems to be happening now with this community, that if there is a dip, people are reacting to buying the dip and supporting the price.
That's bizarre, isn't it? Don't you think? It's a new thing, even to the point where you can think about Bitcoin and all these cryptocurrencies that are an anomaly to most people, and there's a lot of people afraid of it because they are, and it's illegal to trade them in the UK as CFDs, and there's a lot of anti and so forth. So, and we've seen all the startup period at which point where cryptocurrencies were the preserve of fraudulent exchange owners who ran away with the money, and there was no recourse and things like that. However, now it is, even despite all that history, go back to the Swiss bank, when the Swiss National Bank a few years ago, when they took the peg out between the euro and the franc, it caused a huge volatility, and lots of people, lots of banks, and went into negative client balances and lost their money. And everyone went nuts about this, and there was new legislation and lawmakers scratching their chins. Cryptocurrencies overnight go down by $1 trillion in value in one day. No one said a word. And in fact, the people who would have been afraid of it before said, oh, I want to start getting in on this now. Whereas that's bizarre, isn't it?
I'm not sure whether I think it's bizarre. You know, if we talk about, let's say, Warren Buffett, who let's, you know, absolutely say seems completely removed from the crypto community.
Yes, that's right.
But I always remember taglines from Warren Buffett that he enjoys when markets collapse, because the asset that he valued yesterday is actually now half the price.
That's right.
And so
still an asset.
It's still an asset that you wanted to purchase. So maybe it's not that bizarre.
No, maybe not. Maybe in the past, the conservative way of looking at things that we all remember was that maybe that was disruptive. Maybe this is the way forward now.
Maybe.
So it's a very interesting time, but as always, really nice to speak to you, and thanks for being here today, Dan.
No trouble. Thank you.